lovely. What up, everybody? Lovely, lovely. Good to see you guys back. Nice 2 a.m. or 2 p.m. open here. Give me 1 sec. Shiro's in the building. What up, everybody? Good to be back. Let me set Zoom up here real quick. W's in the chat. Did anybody open up the casino here today? Took cells.
Oi.
All right, my bad. Hold on, let me get Sam up here, and everybody. I think we're good here. Let me just W's in the chat. Oi.
Oi. Yes, sir.
Here we go. Coming back down. Coming back down. All right, let me get Sam up here. Let me share my screen. All righty, coming back down or what here, Sammy boy? Big motion. Let him cook.
What happened? Why did it mute me again? Hey, nah. So listen, the rates came out the same, so we should come up on gold, right?
Coming up.
So notice how this 1 hour candle left without a top wick. So
yeah,
let's see if we can maybe form some sort of support and keep moving up here today. Same thing with the stocks as well.
The stonkies.
Yes, sir. So let's see if
Oh. W's in the chat, by the way. Big motion chat. What up, everyone? Sorry about this. Sorry about that. How y'all doing? Good to see you all. We're playing Daddy Daycare over here today.
He's slanging eggs.
He's slanging eggs. Maverick just called my mom by mistake. That's why I was like, oh, snap. And my mom was on FaceTime over here. Maverick calling my mom Dukes for the happy birthday message.
Yo, happy birthday.
Yes, sir. Yes, sir. Yes, sir. Give me one moment. One moment. So, yeah, we'll talk about these charts in just a second. What up, Mike? Mike?
Mike. TP got hit. Mike at the casino. We got Raja in the building. Alexandru. Big motion. Big motion. I see you. Brewski in the building. Got Cat. Anthony Fernandez.
What up, Ant?
We got motion.
We got big motion here. All right. Okay, perfect. All right, Sam, so why don't you talk to us your thoughts here real quick, then we'll do a breakdown and pretty much make sense of what you are going to educate us on here.
Yo, so the federal funds rate, that we saw no change today, right? So if we were going to see an increase in the rates today, you would see an outflow out of the assets, which would be like stocks, gold, etc., because those would be now less favorable to hold because the interest rates on them would be higher. However, they didn't increase the rates, so there's no change to those rates, so that we should just see the price action continue like we've been seeing it all day. You know, we've been seeing the bulls come in. I believe that this FOMC got priced in this morning a little earlier, with obviously you've seen that bullish rally, but
yep. Yeah.
Yeah, let's see what
Forex Frank was saying too earlier. Makes sense.
Yeah. I'm interested to see what Powell has to say in terms of, and how he really comes to the table with the conference, and see if he comes with a dovish tone. I mean, obviously pretty dovish just because there was no increase, right? But I don't know. I want to hear what he wants to talk about and the deciding factors on why they didn't go through with the 25 BPS hike. So we do a little pal.
Sweet. We do a little pal. Cool. So let's take a look at the price action here and what we got going on. So daily time frame here, man. We had this zone over here that we still remain below there, right? Candle close and no top wick. Today we broke the lows, and now look, we're pushing up here, right? So we talked about this zone being tapped into at some point, and that's what we're doing here now. 4 hour just obviously just juiced up here on that last candle, as we've seen earlier on today, and now you have no top wick, right? No top wick on the 4 hour candle. Pretty much a lot of rejection in this zone. There is clean traffic, I would say, above 1950 here. So we got 1950 up top here, and because we did close with no top wick there, so that gets a bit tough. You had this big engulfing candle, no bottom wick still down here, right? No bottom wick on that 4 hour candle. Let's take a look at the 1 hour. 1 hour is giving us a support, and has also given us a resistance here, right? We got this resistance. Hold on. So we got a support, we got a resistance. Let's take a look at the 30 minute. 30 minute as well has a support and a resistance here. 15 minute as well, right? You got to adjust that just a little bit here. And this is pretty much what we're looking at, right? So this is the range that we're in. We're starting to engulf this range here on the move down. And now we'll see what's up, right? We got clean traffic to the left. Again, if we look left on the buys, there is some sort of resistance right here, which is a good 50 pips away. So we'll look to target this area here if we get closures above. And then if we're breaking back below, then I think that we can target, back down in this consolidation zone, 1931. So let's see what happens here as this 30-minute candle closes. We got 230 pals stepping up to the podium, and we'll see where we're at that point. Sorry about the music, guys. Give me one moment. Okay. I think we're good now. Oh, just say no to the casino. Who took sells here? Did anybody have buy stops, sell stops? I probably would have had them. Probably sell stops on the lows here, buy stops on the highs. Did anybody do that? Anybody? Anybody?
No slur. Not me, at least.
No, I didn't take it either. I had sells. Nice, Forex Frank. I would have had it at the previous candle. Nice. No casino. We don't gamble here. How long will I stream? I don't know. We'll see. We'll see. Probably till like 3:15, 3:30. Yeah, so this is pretty much the range that we have. Let's see if we can get a break out of this entire consolidation range here. It's pretty much, you know, it's a big range, but we need to see some sort of direction outside of it. We could either go up, right? Go up here today. I'll look to take buys above here. Or if we come down, I'll look to potentially take sells. Coming back down to retrace that move there. I put a 0.5. Oh, nice. Sells, nice. Yeah, Jerome finna open up the casino here today. Jerome finna open it up. Had sell. Oh, nice. Good job. Congrats to everyone who caught that move. What was that? About 50 pips? 60 pips? Nice. What did the NASDAQ do? Anything?
Pull back. Let's see. Was just looking at it. Looks like it
Nice
wants to
little
find
drop
some
down.
support and come back up. It's kind of like how I'm picturing everything right now, personally. I want to see if we can't form some sort of onion. For like a bullish onion. Come back up.
Yeah. What up, Johnny boy?
Good, boys.
Johnny boy.
How are we feeling today?
How we doing? Feeling great, bro.
Brother.
Feeling good.
Bro,
Wow,
you
you
got back.
Good to see
Oh,
you.
Always dope.
Back
Chat.
again.
Yeah,
Oh,
bro.
look at this. Oh wow, this actually
happened?
worked out here. Yeah, we had sell stops earlier.
Yeah.
It actually came down here with So yeah, so remember earlier where we
4
set
hour.
the 4-hour breakout, right? We had this breakout here. Sell stops were going to be on the break of the lows. Price came all the way back up and then came back down here. So we had sell stops about an hour ago after this closure here, right? Price pumped up, broke the highs, and then we had sell stops on the break of those lows, but never got activated there. But price came downtown there now. So let's take a look here. So 4 hours a bit choppy here on pound yen. Got a little bit of some barcode strategy going on. We have this support here. You have a pretty strong resistance up top here. Not going to take any buys on pound yen unless we're actually above 183.355 here. In terms of the sells, there may be an opportunity if we get a closure below here. So we'll take a look at that. We'll probably focus mainly on gold here, but pound yen is there as well. Yeah, so like Sam said, if we can kind of create a support here, then we may come back up and target this this no top wick here on the bearish candle.
Yeah, that would make sense too with the fundamentals as well.
Yeah. Yup. What up, Yanosh?
You know.
Hey, chat. What's up? What's good, chat? Sandman, what's up?
Sandman in the building.
Damn, man.
We doing?
So wherever you guys want to watch, we'll see what Pal has to say.
Yeah, he'll come on in like 15 minutes, I think. On the Federal Reserve YouTube channel.
Full margin time? Nah, never.
Hey. Okay, cool. Look at this. Let's see if we can create support. Full margin? Yeah. Oh yeah. So what'd you boys do? Got some lunch. I hit the gym. Just chilled. Had to run a few errands real quick.
Yeah.
Banged out a
basically what I did.
quick workout and came back.
Yeah, I mean, I didn't eat anything. I continued to fast, and I just did some push-ups before.
Nice.
Nice.
Very
I
nice.
did some laundry, bro. Folded
Some
clothes.
laundry.
Okay,
Laundry
I mean,
day?
Nice.
Yeah.
Do you have like a scheduled laundry day, Sam? Or
Hell no.
Hell
Ah.
no.
Once I run out of shit, I like to work.
yeah. Once you don't got any more, clothes, you gotta go.
It's like crap, I ran out. I delayed this too long. Yeah, we'll watch Pal. He's going to come on in a few minutes, so we'll see what he has to say. And, yeah, if we get support here, that wouldn't be too bad. All right, we should come up. We created support last time, moved up. Created support here, moved up. So if we do create support, we may get an opportunity to move back up here. Yeah, 30's going to close too. So if 30 closes above here, plus 15 minute gives us support, then I think we have a high probability of moving up. Got about a 48 pip range.
Started at work, still at work. Luis G, I see her every day, bro. Keep working, and then you won't be at work no more.
Yes, sir. Yes, sir. You got this, bro.
Believe in you.
Happy birthday to Nick's mom. Hey, thanks, Jet.
Nah.
Maverick just called mom on FaceTime.
Really? Are you
Yeah.
for real? Oh,
He wanted to say happy
it's
birthday.
probably hype. Where?
Yeah, we're flying up to see my mom tomorrow. Be up there for a few days.
Where?
Switch of weather, switch of pace. Hit the restaurants up, and then come on back. Good
Good to
food,
switch it up
yeah.
sometimes.
TK knows.
Oh yeah. Really good food, bro.
Legit, we were
Cool.
just going up to hit up a few restaurants. My mom's birthday just happened to fall on that day. Sorry, mom, if you're watching. But yeah, the idea was to go get some good food, man. But yeah, why
Yeah.
not?
Nah,
Perfect time with my mom's birthday.
actually, nah. There's some fire joints up by where we live, or used to live.
Will I still be calling signals on Friday? Yeah, if I take trades, I will definitely be calling signals. There's no way it's actually we met at Barnes & Noble one time, if you remember, a long time ago. Hey, David Prophet, there's a high chance, and I mean extremely high chance, that we met at Barnes & Noble. You have to message me on Instagram or something, man. I can't tell from the profile. How's Florida, Nick? Alligator steak? No alligator steak just yet. Pretty soon. I just gotta run into the right guy.
Here, can I draw something? If we could form like a nice bullish candle like here, like how it is now, on this like 15,
Mm-hmm.
and then like on the next one, if it could like come down and like break this low, grab that pack, and then like tap into this zone here on the left, like, and then come back up, break its own high.
Yeah, that'd be sweet.
I'm putting the
I'm
house
putting the house on it, boys.
A margin. Yeah. Thanks.
Oh, there we go. Let me check out your YouTube here. Oh.
See that, chat? Just wait on it.
Wait on it. Yeah, what's good, TK? Exactly.
Oh yeah, David, what's going on, man? How are you, bro? It's been a minute. A few years ago, right? At least, what? Maybe 7 years ago, maybe more. Good to see you, man. Glad you're doing well. Let me sub to the channel. Let me sub to your channel. Yeah, I'll take a deeper look at it later, man.
That's crazy.
Dope.
Small world.
Pretty cool, bro.
That's sick, yeah.
Yeah, like 7 years ago. Ah, yeah, you see?
And it's dope where you guys met, too. Barnes & Noble.
Oh, yeah.
Seeking that knowledge.
Is the promotion still up for the signals? Yeah, we're going to run the promotion probably till like tomorrow. What's tomorrow? Thursday? Yeah, probably till Friday. I think I said we'll do it for 2 weeks, right? Yeah, W for David.
You did.
Brother, your hair is beautiful. Thanks, my man. Thanks, bruh. Thanks, bruh. Hey, we running daddy daycare over here right now.
Hey, bro, that's what's up.
Full-time dad,
toes.
part-time trader. I'm becoming touchy. Yeah, shout out to all you guys watching at work. Where's FX Viking? that man's in the bathroom on the toilet with his pants on.
See, getting the knowledge.
Doing whatever it takes. Whatever
I'd
it
be doing the
takes.
same thing. I'd be doing the same thing.
He's probably like, if he's not on yet, he's probably thinking, you know what? Let me wait for like the actual press conference when it gets juicy. Then we'll get on
True.
Definitely do.
Oh, damn. Are you switching up your session time just for news? Yes. Yeah, we'll be back tomorrow, same time, same place. Watching at work? Nice, Groomsmith. Yeah, we got 4 minutes here for closure on gold, so. In Sam, we trust.
Coming. Facts. Sam, we trust.
Because, well, I say, like, if it could grab that pack, too, just because it's, like, new 30-minute candle, it's going to want to make a bottom work. And then it's, like...
Yeah, I think the break of the lows is a really good idea.
Yeah.
And tap into this support here. Push it.
In Powell, we trust.
Mic him up. Oh yeah, I think Pal's coming out here. Let me let's get Pal up here.
Come up.
Where do you guys want to watch? Where do you want to watch Papa
To
Pow?
the chat.
And then I'm gonna say this too. If you want a real casino entry, you press buy when it breaks the lows of the 15.
Sniper. You
But
you
put
buy
your
the
stop
pack.
below the wick of the you buy it at the pack where it gets grabbed. Stop below that 15 that drove down and broke the lows.
You gotta buy the pack.
Hey,
We'll
hey,
get
hey,
there.
Hey, you do as you want though. Do as you want. That's not playable. That's why we say casino.
Where should we watch?
Well,
What's the
it's
best
labeled
one to watch
casino.
at?
Do they have the Federal
Neither
Reserve
one is should-
YouTube?
Yahoo
see if I can
Finance,
find
CNBC.
Oh, here it is. I'm gonna link it in the Zoom.
Alright, cool.
13,000 people are watching this.
13,000. Give him some time. Give him some time. He's coming. Full margin packies right as they introduce him too. Right as they introduce this guy. Yeah, 15's gonna close in 1 minute here. Stops are a bit steep though if we end up doing this. The juice bar is coming.
Yeah, if this next candle opens up and it's like really crazy, I'm holding off. Just wait at that point as well. Good advice.
Yeah, I
for
think 3
everybody
p.m. is where
listening here
the
today.
yeah.
The money's gonna be definitely by then we should see something we like.
Yeah. 3 p.m., 3:15 will probably be our move. We'll take a look in 35 seconds, you know, as this candle opens, but where'd Jerome go? Here he comes. Everyone's getting ready.
They're getting fired up.
Dude,
JP.
Y'all good? Got these kids, man.
20,000 people watching. Shoot.
where you at? Let's go.
They're all waiting on him
Bring them out.
to deepen their pockets. Yeah, we'll probably wait for after the speech. See what happens here. Hey, Bob the Third. What's going on, man? How are you, sir? There he is. Big Papa Pal.
High inflation.
Oh. What's going on
Price
here?
stability is the responsibility of the Federal Reserve. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Since early last year, the FOMC has significantly tightened the stance of monetary policy. We've raised our policy interest rate by 5.25 percentage points and have continued to reduce our securities holdings at a brisk pace. We've covered a lot of ground, and the full effects of our tightening have yet to be felt. Today, we decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. Looking ahead, we're in a position to proceed carefully in determining the extent of additional policy firming that may be appropriate. Our decisions will be based on our ongoing assessments of the incoming data and the evolving outlook and risks. I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has been expanding at a solid pace, and so far this year, growth in real GDP has come in above expectations. Recent readings on consumer spending have been particularly robust. Activity in the housing sector has picked up somewhat, though it remains well below levels of a year ago, largely reflecting higher mortgage rates. Higher interest rates also appear to be weighing on business fixed investment. In
Is
our
our top
Summary
weight?
of Economic Projections, or SEP, committee participants revised up their assessments of real GDP growth, with the median for this year now at 2.1%. Participants expect growth to cool, with the median projection falling to 1.5% next year. The labor market remains tight,
Dude pulled
but
out the
supply
chart
and demand
today.
conditions continue to come into better balance. Over the past 3 months, payroll job gains averaged 150,000 jobs per month, a strong pace that is nevertheless well below that seen earlier in the year. The unemployment rate ticked up in August, but remains low at 3.8%. The labor force participation rate has moved up since late last year, particularly for individuals aged 25 to 54 years. Nominal wage growth has shown some signs of easing, and job vacancies have declined so far this year. Although the jobs to workers gap has narrowed, labor demand still exceeds the supply of available workers. FOMC participants expect the rebalancing in the labor market to continue, easing upward pressures on inflation. The median unemployment rate projection in the SEP rises from 3.8% at the end of this year to 4.1% over the next 2 years. Inflation remains well above our longer run goal of 2%.
Where'd he go?
2%,
Oh, there.
4% over the 12 months ending in August, and that excluding the volatile food and energy categories, core PCE prices rose 3.9%. Inflation has moderated somewhat since the middle of last year, and longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. Nevertheless, the process of getting inflation sustainably down to 2% has a long way to go. The median projection in the SEP for total PCE inflation is 3.3% this year, falls to 2.5% next year, and reaches 2% in 2026. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I
So
are
that's
acutely
right
aware
there.
that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials.
I was just
like
gonna say
food,
that right there is
housing,
the
and
main key
transportation.
point why we didn't see a hike today.
We are
was
highly
to
attentive to
keep
the risks that high
employment at a
inflation
maximum.
poses to both sides of our mandate, and we are strongly committed
And
to
then
returning
I forget what the other
inflation
thing
to
he
our
said
2%
was.
objective. As I noted earlier, since early last year, we have raised our policy rate by 5.25 percentage points. We see the current stance of monetary policy as restrictive, putting downward pressure on economic activity, hiring, and inflation. In addition,
Whoa. He's lagging.
the economy is facing headwinds from tighter credit conditions for households and businesses. Range for the federal funds rate at 5.25 to 5.5%, and to continue the process of significantly reducing our securities holdings.
My guy's the white Yoda.
We are committed to achieving and sustaining a stance
Nah,
of
son.
monetary policy that is sufficiently
Yo.
restrictive to bring inflation down to our 2%
That's so
goal
true.
over time. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. If the economy evolves as projected, the median participant projects that the appropriate level of the federal funds rate will be 5.6% at the end of this year, 5.1% at the end of 2024, and 3.9% at the end of 2025.
Interesting.
Compared with our June summary of economic projections, the median projection is unrevised for the end of this year, but has moved up by a half percentage point at the end of the next 2 years. These projections, of course, are not a committee's decision or plan.
So they're only
If the
looking to
economy
drop
does
it
not
100
evolve as
basis
projected,
points
the path of
maximum
policy will
throughout the
adjust
whole
as
course of next
appropriate
year.
to
Interesting.
foster our maximum employment and price stability
They want the
goals.
soft landing bad.
We will continue to make our decisions meeting by meeting
Ooh, they
based on
want
the
the soft
totality of the
landing.
incoming data and their implications for the
Pushing
outlook
back
for
down here,
economic
30-minute
activity
pack
and
runner.
inflation, as well as the balance of risks.
We'll see how the
Given
30
how
closes.
far we have come, we are in a position to proceed carefully as we assess the incoming data and the evolving outlook and risks. Real interest rates now are well above mainstream estimates of the neutral policy rate, but we are mindful of the inherent uncertainties in precisely gauging the stance of policy. We're prepared to raise rates further if appropriate, and we intend to hold policy at a restrictive level until we're confident that inflation is moving down sustainably toward our objective. In determining the extent of additional policy firming that may be appropriate to return inflation to 2% over time, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. It is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Oh, everyone's got a question today for JP.
Thank you. Colby Smith with the Financial Times. What makes the committee inclined to think that the Fed funds rate at this level is not yet sufficiently restrictive, especially when officials are forecasting a slightly more benign inflation outlook for this year? There's noted uncertainty about policy lags.
Cool.
Headwinds have emerged from the looming government shutdown, the end of federal childcare funding, resumption of student debt payments, things of that nature.
So I guess I would characterize the situation a little bit differently. So we decided to maintain the target range for the federal funds rate where it is at 5.25% to 5.5%, while continuing to reduce our securities holdings. And we say we're committed to achieving and sustaining a stance of monetary policy that's sufficiently restrictive to bring down inflation to 2% over time. We said that. But the fact that we decided to maintain the policy rate at this meeting doesn't mean that we've decided that we have or have not at this time reached that stance of monetary policy that we're seeking. If you looked at the SEP, as you obviously will have done, you will see that a majority of participants believe that it is more likely than not that it will be appropriate for us to raise rates one more time in the 2 remaining meetings this year. Others believe that we have already reached that. So it's something where we're not making a decision by deciding to.
Oh, I'm still listening to it. I thought you had it up.
By deciding to just maintain.
He's like,
there's
there's still a high probability of us
So
doing
right now, it's still an open question.
25 basis point hike
You're not saying today
throughout the
that
remainder
we've
of the
reached
next
this
2
level.
We're not saying, no. Clearly, what we decided to do is maintain the policy rate and await further data. We want to see convincing evidence, really.
Okay,
that we
boom. So
have
this is
reached the
basically what he
appropriate
just
level,
said.
and
They
we've
didn't
seen
hike the
progress,
rates
and
because
we
they want to
welcome
wait
that.
for more data, and wait for more data to see what's gonna happen with the economy coming up.
It's some
So
BS.
no hike.
No hike.
So now we follow price. Interesting here. Let's see how the 30-minute 1 hour closes. Yeah, we came up and gave that candle a top wick. Goldie, Goldie, right, Shad? Goldie, Goldie. Yeah, no, the 15-minute onion play looked good. Looked like a good move. Came up, did
I was
exactly
in
what we
there if it
expected.
made that bottom wick first.
Yeah, yeah. Yeah, if it would have broke the low there on that, I think we would have been in that. No more
You said you had a
barcode.
nice steep 30-minute bottom wick.
Yep.
For the new 30, yeah, it would have been good. And then would have went up.
Yup. Pal himself is a barcode.
He's Yoda.
He's Yoda, yes. He actually does look like Yoda.
He does. For real.
Yeah, so you got 15-minute support. You got 15-minute resistance up top here. 30-minute support is right below here. Right, but we have this other area right here as well. So we want to make sure we're on point here. Sam's got the white screen up.
I'm still
He
interested
shot
to see
it.
if it grabs back on a 15.
Let's see.
We'll see. It's like really late in the candle, but that's just kind of what I'm watching to see. I want to see if it does that and then rejects and then like, comes back up. And then I feel like boom. I'm not saying there'd be an entry, but there would be. I mean, that would.
Yeah. We got 16 minutes here for the 30 to close, right? Yeah, 16 minutes. No pack just yet though on the 15. Yo, imagine Pal's like, and shout out to the TTE community holding it down.
Yeah. That'd be wild.
I'd start saluting.
Oh, look, chat, we cracked 18K subs here. Just noticed that. Nice. Hey, if you can like the stream, that would be awesome here today. Give the stream a like. 18K subs. Very nice. When did we do this?
Oh,
Let's see. When did we do it?
Today?
Yeah, we definitely hit it today. Oh, nice. We must have just did it. 49. Appreciate you guys. Look at this. 1 million views, gang. 1 million. 1 million.
Ooh, even if his 15 closes like a little bullish, and then comes down and grabs pack, and then goes up for like a wick fill.
Fires up.
Let's see.
Oh, just before the stream we did it. Oh, nice. Let's go.
And bearish.
Bearish close. Yup.
So I see nothing.
Nothing. You can't hear nothing Sam said? Should be good. This is teamwork. Yeah, exactly. It is. It is teamwork. You're hearing a new pad.
We're in flow. We're in flow. Yo, thank you, Dania.
Oh, GJ, nothing. Yeah, so we've been getting caught up over here. Let's see if we can see. We've been caught up here for quite some time above this 15 resistance here. So we're still trading above that.
It's his 30 closure.
Ooh, Nazi looks good on the 15 too.
There's FX
Yeah.
Viking. Let's check out NASDAQ here.
Just checking out everything right now while we're waiting.
Oh, yeah.
See if it'll keep coming up.
Oh, yeah. Nice closure. There's the Viking.
Hey, FX Viking, what's good?
Let's see. Is Powell
Yeah.
still talking? He still is, honestly. I think 3 p.m. will be the move if we
I
get
think
one.
so.
And that the
Yeah.
economy reacts. And again, that's another reason why.
Do I
we're-
stream
we're
every day?
really careful
Yes.
now
Every
because,
day.
You know, there are lags here. So it may of course be that the neutral rate has risen. You do see people, you don't see the median moving, but you do see people raising their estimates of the neutral rate. And it's certainly plausible that the neutral rate is higher than the longer run rate. Remember, what we write down in the SEP is the longer run rate. It is certainly possible that that the neutral rate at this moment is higher than that, and that's part of the explanation for
Pal
why
making
the economy
traders
has been more
dance today.
resilient than
Dance, dance.
Howard Schneider with Reuters, thank you. So you've said several times that the economy needed a period of below-trend growth to get inflation consistently back to 2%. You kind of get that in 2024, a little bit, 1.5%.
Said Pal looks like Yoda.
What's the estimated potential? So the fact that you're getting so much done at so much less cost, does that represent a change?
How do you balance work life and streaming? Streaming is work life.
A change in the
Streaming
mix
is
of
the
supply
work.
healing versus demand destruction that's necessary to
There is no work.
Yes, of course, it is a good thing that we've seen now meaningful rebalancing in the labor market without an increase in unemployment, and that's because we're seeing that rebalancing in other places, in, for example, job openings, and in the jobs worker gap. You're also seeing supply side things, so that's happening. I would say though, I still think, and I think broadly, people still think that there'll have to be some softening in the labor market that can come through more supply, as we've seen as well. Also, remember the natural
FX
rate, we
Viking, man,
think
I'd be
is
doing the same
coming
thing.
down,
For real.
which is a supply side thing, so that the gap between any given unemployment rate that's lower than that and the natural rate comes down. That's a way for that's a way for the labor market to achieve a better balance. So all of those things are happening. You're right. In the median forecast, we don't see a big increase in unemployment. We do see an increase. And but that really is just playing forward the trends that we've been seeing. That is not guaranteed. There may come a time when unemployment goes up more than that, but that's really what we've been seeing, is progress without higher unemployment for now.
So just to boil that down for a second, we've gone from a very narrow path to a soft landing to something different. Would you call the soft landing now a baseline expectation?
No,
Soft landing, Sam.
I would not do that. I would just say, what would I say about that?
I would not do that.
I've always thought that the soft landing was a plausible outcome, that there was a path, really, to a soft landing. I've thought that, and I've said that since we lifted off. It's also possible that the path has narrowed and it's widened, apparently. Ultimately, this may be decided by factors that are outside our control at the end of the day. But I do think it's possible, and I also think this is why we're in a position to move carefully again. That we will restore price stability. We know that we have to do that, and we know the public depends on us doing that. And we know that we have to do it so that we can achieve the kind of labor market that we all want to achieve, which is an extended period, sustained period of strong labor market conditions that benefit all. We know that. The fact that we've come this far lets us really proceed carefully, as I keep saying. So I think that's the end we're trying to achieve. I wouldn't want to handicap the likelihood of it, though. It's not up to me to do that.
Nick Tamaros of the Wall Street Journal. Chair Powell, both you and Vice Chair Williams have indicated that sufficiently restrictive will be judged on a real rather than nominal basis, implying some scope for nominal rate cuts next year, provided further compelling evidence that price pressures will continue to subside. Is the FOMC focused on targeting a real level of policy restriction? And can you explain what would constitute enough evidence that will allow the FOMC to normalize the nominal stance of policy while keeping real policy settings sufficiently
Oh, this guy's been up
restrictive?
all night.
I mean, yes, we understand that
been
it's a real
practicing.
rate that will matter.
He's been
and
practicing
needs
that
to be
question
all
sufficiently
night.
Restrictive.
Yeah.
And again, I would say you know sufficiently restrictive only when you see it. It's not something you can arrive at with confidence in a model or in various estimates, you know. And so what are we seeing? We're seeing, you know, through a combination of the, you know, the unwinding of the pandemic-related demand and supply distortions and monetary policy's work in suppressing demand or alleviating very high demand. The combination of those two things is actually working. You're seeing, you know, inflation coming down. It's principally now in goods, also in housing services. You begin to see effects of it in non-housing services as well. So we think that is working. And I think what, you know, as we've said, we want to reach that, we want to reach something that we're confident it gets us to that level. And I think confidence comes from seeing, you know, enough data that you feel like, yes, okay, this feels like we can for now decide that this is the right level and just agree to stay here. We're not permanently deciding not to go higher, but we would, let's say if we get to that level. And then the question is, how long do you stay at that level? And that's a whole nother set of questions. For now, the question is trying to find that level where we think we can stay there. And we haven't gotten to a point of confidence about that yet. That's the stage.
This year, and even then it seems possible that core PCE inflation could come in even lower than the median at 3.7%. Would you see a case to raise rates still if it turned out that you were going to achieve the same real rate this year because the decline in inflation proceeds somewhat better than you currently anticipate?
The decision that we make at each meeting, and certainly at the last two meetings this year, it's going to depend on the totality of all the data. So the inflation data, the labor market data, the growth data, the balance of risks and the other events that are happening out there. We take all of that into account. So I can't really answer a hypothetical about one piece of that. It'll be trying to reach a judgment over whether we should move forward with another rate hike overall, and whether that would increase our confidence that yes, this is an appropriate move, and it will help us be more confident that we've gotten to the level that we need to get to.
Gina. Thanks, Chair Powell. Following up on Nick's question, actually, John Williams, the New York Fed president, obviously, has said things to the effect of next year, as we see inflation, kind of, again, to Nick's point, as we see inflation coming down, we're going to need to reduce interest rates to make sure that we're not squeezing the economy harder and harder over time. And I wonder if that's basically the logic that you apply. You know, is that how you think about it? And then I also wonder, in the last press conference, you said something to the effect of, you know, it's a full year out, those discussions, and people interpreted that to mean that you didn't see a possibility of a rate cut in the first half of next year. And I wonder if that was what you meant by that, or whether, you know, how you're thinking about that timing.
No, when I answer these questions about hypotheticals about cutting, I'm never intending to send a signal about timing. I'm just answering them as the question is expressed. So please, I wouldn't want to be taken that way. Sorry, the first question was that how?
Tell them, pal.
As we go into next year,
Let him know, G.
that's the question we'll be asking is, you know, taking into account lags and everything else we know about the economy and everything we know about monetary policy. The time will come at some point, and I'm not saying when, that it's appropriate to cut. Part of that may be that real rates are rising because inflation is coming down. Part of it just may be that
Wink, wink.
it'll be all the factors that we see in the economy. And, you know, that time will certainly come at some point. And what you see is us writing down, you know, a year ahead estimates of what that might be. And, you know, there's so much uncertainty around that. When in the moment, we'll do what we think makes sense. No one will look back at this and say, hey, we made a plan. It's not like that at all. These are estimates made a year in advance that are highly uncertain, and that's how it is.
That's how it is.
Thanks so much, Chair Powell. Neil Irwin with Axios. I wonder, how do you think about the question of whether the strong GDP growth that we've been seeing is driven by excess demand versus supply-side factors, productivity, labor force growth? And relatedly, if GDP keeps coming in hot, even in the absence of inflation resurgence, would that on its own be a reason to consider more tightening?
15 getting tricky here.
So on your first question, I mean, we're looking at GDP very, very carefully to try to understand really what's the direction of it, what's driving it, and it's a lot of consumer spending. You know, the consumer's been very robust in spending. So that is, you know, that's how we're looking at it. Sorry, your second question was?
There's GDP stays hot, but without inflation.
So I think the question will be, GDP is not a mandate, right? Maximum employment and price stability are the mandates. The question will be, is GDP, is the heat that we see in GDP, is it really a threat to our ability to get back to 2% inflation? That's going to be the question. It's not a question about GDP on its own. It's you know, you're expecting to see this improvement, you know, continued rebalancing in the labor market and inflation moving back down to 2% in a sustainable way. We have to have confidence in that, and you know, we'd be looking at GDP just to the extent that it threatens one or both of those.
Hi, Victoria Guida with Politico.
1 hour closing here in 1 minute.
There are multiple external factors that are playing out right now. We see rising oil prices. We see auto workers striking. There's the looming, very real possibility of a government shutdown. And I was just wondering, for each of those things, could you talk about how you're thinking about how that might affect the course for the Fed and the economy?
So there is a long list, and you hit some of them. But you know, it's the strike, it's government shutdown, resumption of student loan payments, higher long-term rates, oil price shock. You know, there are a lot of things that you can look at, and you know, so what we try to do is assess all of them and handicap all of them. And ultimately, though, there's so much uncertainty around these things. I mean, to start with the strike, first of all, we absolutely don't comment on the strike, as we have no view on the strike one way or the other. But we do have to make an assessment of its economic effects to do our jobs. So. You know, the thing about it is so uncertain. It will depend. The economic effects, it could affect, we've looked back at history, it could affect economic output, hiring, and inflation, but that's really going to depend on how broad it is and how long it's sustained for. And then it also depends on how quickly production can make up for lost production. So none of those things are known right now. It's very, very hard to know.
18
so you just have
seconds.
to leave that uncertain and
Where'd he go? Where'd he go?
We'll be learning, I
There
think,
he
over
is.
the course of the next intermeeting period. It hasn't traditionally had much of a macroeconomic effect. You know, energy prices being higher, that is a significant thing. Energy prices being up can affect spending. It can affect over time. A sustained period of higher energy prices can affect consumer expectations about inflation. We tend to look through short-term volatility and look at core inflation. But so the question is, how long are higher prices sustained? We have to.
All right, let's take a look at this closure here.
Effects into account as well. Those are some of them. I'm not sure if I hit them all.
Let's take a look at the closure here that we got on gold and see what this is looking like, right? We closed below on the 15, looks like. We need to see a top wick. Right? We need a stop loss here, because if we don't get a decent top wick, then stops are about 35 pips here. So let's see if we can get a top wick on these candles and then potentially look to enter on the break of the lows. What's the difference here? 5 pips. Oh, will we come up any higher? Yeah, if we can come up again, break the highs here, then we're gonna have sell stops. Let's see if we could break those highs one more time here. Oh. Do you have set same lot size? Yeah, I've same lot size, yep. Oh yeah, if we break these lows, might be gone here. Just sell gold and go to sleep. Sell it and go to bed.
Oh, shut the computer.
Yeah, we may drive down here.
I would have liked to see a steeper public also.
Yeah, because they got us cuffed here, man. They know that that's our stop, right? So we broke those lows. If we can come up and break the high again, that's where most stops are sitting. Then they may bring this thing down and we can enter on the break of this low here. Let's see if we get that. If not, it's fine. There goes the low here. I took it. Nice.
This dude Pound needs to get off the stand.
He's confusing the candles here.
Alright. Come on, bro.
Alright, let's see if we can re-break this high. If we can re-break that high, we'll have sell stops. Even if we just break it, just push up and break it one more time, that'll wipe out all the sell stop or the stop losses there.
Sure.
And then we got about a 59 pip move, about a 30 pip drive down to any resistance here. The feds are watching. Okay, come on. And if not, we may close bullish. Right, we may close bullish to push back up here. Never use stop loss. May get a fake out here. 15 close in 8 minutes. It's a big closure here. With the same here with the news, I think I would prefer a bullish close here, back in the range, and then buys moving back up. We never rebroke that high though.
Yeah, where I could see that actually fake out.
Oh, there it is. So we rebroke that high. We rebroke the high, right? You may see a push down here. There's 7 minutes left in this 15-minute candle now. Stops are about 23 pips up here. Ooh. Let's see. 23 pip stops. We got 7 minutes left. 30-minute looks pretty decent to continue down. 1 hour looks pretty clean to come down. 4 hour no top wick. Yeah. 5. Oh yeah, man. The only thing is the 15 is coming to a close here in just a few. I think we go wait for the 15 and then we'll make a decision here. Because if it closes bearish, most likely we're going to move down. If it closes bullish back in the range, then there's a high chance that price will start to move back up here after grabbing maybe the liquidity here. So yeah, I'll wait for the 15 and then we'll see where we're at. We got 6 minutes for that, so. But we did re-break that high, which I wanted to see. So if you do break this low now, there's a high chance we continue down. I would like for this 15 to close, and then we take a sell on the break of the lows on the next candle, right? 15-minute candle close like this. We get another top wick. We enter on the break of these lows here for price to continue down. Because this candle may close back in the range. There it is, boys. There's the flip up again.
Yep.
There's the flippy. Yeah, because if we close back above, yeah, we're most likely gonna move up here. But if this candle closes below, then there is definitely a high chance if we re-break those lows to come on down. So big candle right here.
Did it close below on your terminal, the 15?
On the terminal, yeah, I think it did. Yeah.
I was curious.
Yeah. Nice, nice. Pushing back up here. If it did close below, where would the partials be? Right here. 1936, 990. Right at that resistance level. That question sounds like you're in this trade. Yeah, I would close partials right around these levels right there. The way I would manage this position if I was in sells right now is if this candle closes bullish back above one of these two ranges here, then I would close that position. Oh, we're up late today. Hey. Andreas spitting bars.
Yes.
Flip it and reverse it. Yeah, this also, if we do close below, this also gives us now previous candle stops instead of current. But we got 3 minutes. It could still close above and drop, yes, 100%. What time is it? 3:15. Coming in 3:15. Yeah, the volume may start to die out around 3:30, 3:45, 4 o'clock ish. So if we don't get anything on the 15, then we'll probably call it.
Yeah. Sleeper FOMC.
Okie dokie. 1 minute. 1 minute. Are we gonna do an Asian session stream? I think so. We're gonna see how price closes here, but most likely, yeah. We'll see how the daily candle closes too today, and but yeah, most likely count on the stream tonight. It may not be a long one. I still gotta pack and stuff for my trip tomorrow. So see you tomorrow. All right, Lemon 11. See you tomorrow, bro. Yeah, nothing here, gang. Doji closed right there. So nothing here for us, I don't think, today. If anything does go down, I'll probably wait at this point for the 30-minute or yeah, probably the 30-minute closure. But Doji close, not the greatest here. Yeah, we'll be streaming tomorrow too. So we'll be live streaming tomorrow morning, same time. But what's it called? Probably gonna run the stream till about a little bit after NY Open, so like 8:30, 8:40, and then I gotta shoot out, catch a flight. I'm in a bathroom stall for nothing. Yo, shout out to everyone in the bathroom stalls here today. Big W's for y'all. Committed. Just tell the boss he had some bad Chinese food last night or something, and they'll understand. I think everyone's been there. I think everyone's been there at some point. So yeah, so keep an eye out here for the Asian session. I'll post in the Asian channel. But last thing too, gang, keep in mind, if you guys are in the Signals channel, I need you guys to message me on Discord with your email that you purchased the Signals with. We're going to be switching you guys over to a new channel, and the signals are going to come out flawlessly now. They're going to be hooked up to my MT5, so please try and get that done for me before Friday. Otherwise, you may get left in the old room, so I don't want you guys to get left there. So, all right, that's the only announcement, I think. Keep an eye out for the Asian session. I'm about 90% sure it's good. We're going to go, but just keep an eye out in case I do have to cancel it. But we should be good to go. And I think that's it. Any last closing thoughts, boys?
Sleeper
I'll come
FOMC?
back tomorrow. Yeah.
Sleeper FOMC, come back tomorrow. That sounds like a good message.
Honestly, though, good day overall. Both streams fire.
Yeah.
You know,
Yeah, fast.
as always.
Yeah, good day, good
Sir.
day.
Yeah, great day, man.
So-
Hope you guys have a great day though.
Oh yeah.
As well as chat.
Yes, sir. You too, bro.
Yeah,
I'll
I might not
give
be
you-
there for Asian session. I'll probably be
Yeah.
slumped.
No worries, no
Word.
worries.
I
You'll
don't know.
be
I might
slumped.
be going out to eat with my mom. We'll have to see.
Oh yes, mom's birthday. That's right. Yeah. All right. All good. I'll keep you guys posted on the Asian session. We should be good to go. Again, 90% sure we're gonna do it. Everything's a go for now. So I'll see you guys at Asian. If anything changes, you'll get a message from me. But other than that, peace. Mike. Let's get some Mics
Peace
on the
out.
way out. Some W's on the
Peace out.
way out. And I'll see y'all later on. Cool.
This is
Peace.